Testing 1 2. Mic check. Testing 1 2. Mic check. Oh, okay. Thanks, Duke. Sorry, I'm a little late here. It's a Mother's Day event, and I know where my priorities are. Okie doke. Okay, so let's go ahead and get started. This is a swing trading question and answer session for May 13th, 2018. All right, so this one could actually be really short. We only have one question for today, and that one is a general question. Ken, would it be okay for people that started in the March 2018 group ask questions in the following swing groups, question answers? Would it be okay for you if we maintain our accountability group after the end of the swing course from Mario? So absolutely yes. So that group of guys has organized a little four-man collaboration team called the Ox Riders, and they have really been knocking it out of the park as far as working together and really taking advantage of Basecamp the way it can really be used, and that is very powerful. It's the crosstalk among peers. So I really want to encourage that, and so to do that, what I'm going to say is, just keep rolling your questions into the next start session, and I want you to keep the accountability group to keep going, and I have their permission to use it as an example of what collaboration can be. Everybody that's taking this course can learn an awful lot from what those guys are doing. I'm asking those guys if they would write an executive summary of their learning so they can talk about what they got out of putting in the effort to collaborate in a group of four. I've been so impressed with their group effort that I'm granting them a $500 scholarship or coupon for any Tortoise product, service, or subscription that doesn't expire until they use it, just to recognize the outstanding effort that they've put in. So it's worthwhile just showing kind of what they're doing. So let's briefly go to the to see what these guys are up to. So that's like the March group, but I guess it's in the messages where they're getting most of this work done. So the Ox Riders is the trading team, and it started off just by looking for accountability partners and sharing their information back and forth. They've been collaborating and alerting me if things need fixing. They've been sharing files like the daily, weekly goals and tracking sheet. Let's see if I can find some more. Let me find the Ox Riders here. So this is, you can go to the focused ones here. So that's what these guys are working on back and forth, sharing spreadsheets like the risk z-score histogram prototype that Griff has been working on, modified 551W rules that Elmer Burris has put together, a nice work where he's kind of tailored it to his work, and he's been using it with his spreadsheet with Norgate and AmiBroker. Those are his platforms for execution and backtesting. Sharing zero state exercise homework back and forth and talking about the psychological interpretation of all that stuff. So some more work. This is Griff has been working on market classification, a learning journal, a classification worksheet, a record keeping system in the swing systems and strategies. By the way, all of those files are available for download for those of you subscribed into the course. You have access to all those things. Various learning journals about the course all the way through. I was making some points in here where I was commenting on their crosstalk, and they had been talking about exit management, and so I put a couple, 3 case studies on exit management that was kind of related to their work. Another homework learning summary from Mario. So you can see they're using this as a very powerful collaborative learning space. Here's some. I think some of the guys have been asking about some more information about the OWL, and I was basically showing them how to get into that. Here's some videos about the OWL. And so when you use the collaboration space, it helps me help you. More on, here's Griff's 50 trades in the 5DD using the turbo trading technique. Here's some more case studies from Griff in the 5DDI, which he's been using as like a swing trading 1 day at a time approach. More on the market classification on a weekly basis. So this is Travis developing his techniques and applying these things to his own personal trading style and becoming self-sufficient, which is kind of my goal in all this. Some more from Griff on 5DDs and washout screens. Elmer on some an interim update on his learning and adaptation to his own work. Now, I think if you asked Elmer, he's been a loyal subscriber and hard worker for years now, and I would say that he probably has made more progress in the last year through the collaboration process than in the previous ones. I'll leave it up to Elmer. I see Elmer is in there right now, but that's my sense of the progress you're making, Elmer. Would I be correct in that? While I'm waiting for him to answer, here's some more. So just some amazing. Here's Elmer took the that Myers-Briggs little instrument there, the modified Myers-Briggs, and he's a ISTJ, and some information and some insights available. And all the guys kind of took that and are looking for some insights based on personality preferences and choices. Yeah, and so Elmer said, yeah, that I really think that trading can be such an individual, internal, lonely profession and craft, that having a chance to come to a meeting place and talk about it and share insights and have people looking over your shoulder and watching your back really makes this a feasible, sustainable enterprise. That it's hard enough to do this on your own, but when you have a support group of guys that are speaking the same language, committed to each other's success, have a place in which you can do that, and where you can put documents and search things and share resources in an open-ended way, I just think the learning community these guys have built is really extraordinary. And so that's why I want to acknowledge that by offering them that $500 coupon, and then say, and really the intention of this trading course is that as long as you're a subscriber, you know, and when you sign up for the course, you automatically become a subscriber for a year. I give you the silver subscription for a year anyway, and so you get access to that course for the whole year. And then as long as you're a subscriber at the silver level, you not only get the chat room, but you also get to stay connected to the learning environment of the swing trading course. So as we develop new ideas, as other people are putting together worksheets and products and looking to collaborate, as long as you guys are putting that work in, then to me it only makes the course better. It helps me sharpen my own instruments, and it provides a benefit to everybody else that's working together. So for me, the real work is done and refined in this kind of workshop space. So I really want to encourage you guys to do that. So the use of the message boards allows you to work together in collaboration groups. The write boards, as you've seen, give you the ability to add questions and answers and all that stuff. You can use the files space to to quickly find things that people have uploaded. And if you come over here to the uploaded by area, if you wanted to find just the things I put in, you would just click my name, and it would filter for you to do that. Or if you were looking for things from guys from the Ox Riders, you could do that as well. And then you can search very quickly for files, and you can actually search for all the projects that you have access to. So you can search for anything inside that whole project, like 5DD. You could crank that in there and come up with a focused result. So everything is archived in there. That's pretty powerful. You can use the to-do lists if you want, and assign. Nobody's really using them because we don't want to task each other. But you could use the to-dos or the calendars. So anyway, the workspace in Basecamp is really, I think, a pretty powerful technology for collaborative learning, and so I want to encourage you guys to go ahead and use that. Some other things that I wanted to share too. Let me get back to our dashboard. Yeah. So, all right. So here's one that came out of. It was my own debriefing actually at the last workshop I did out in Cary, and I was trying to answer some questions about integrating the different time frames, and so this is kind of a new structure, if you would. Yeah, that's not good. Yeah, let's see. I'm going to try to create like a little easier pointer so you can see. So I'm right now I'm thinking of myself as a bowl maker making bowls, and I really have three time frames that I'm going to talk about: position trading, swing trading, and day trading. And I'm going to talk a little bit about the use of that technique of core and turbo trading that acts as it unifies or integrates position trading and swing trading, and it also integrates swing trading and day trading. And then taken collectively, the thing that ties them all together is sort of a meta system of management that's really about managing self, using the workspace, the teaching space as a learning space and a research and action space for myself, because I learn from teaching. The use of I use peer review to help me with my own blind spots and to keep me focused on needs of the community. And then I use this technique of a board of directors and then the next generation board of directors to keep me grounded. So for me, my board of directors are really those guys that have the ability to just tell me to stop what I'm doing, or I will take their advice even if I don't necessarily agree with it. I'll give it a try. They have the right of veto or override on everything that I'm doing. So this is a handful of guys that have been trusted agents and great friends, but who are also truth tellers and call them as they see them. And so I respect their. So I think if you have a board of directors in your own life, you think of it in those business kind of terms, it acts as a regulating mechanism for yourself, and acts like outriggers on an outrigger canoe, and lets you deal with the volatility in your own life and helps keep you grounded. And then I think about the next generation, that is looking for talent in younger folks, people that I am, say, teaching or working with that are younger than me, that whom I would be happy to work for them in the future. And so I'm looking for young folks who are getting it at a much earlier age than I ever did. And I try to look for that kind of a talent, because they have the kinds of insights that help old fogies like me. Well, if you look around this perimeter, this is sort of the outer ring and the inner ring, and then the core of who I am and what I'm trying to do. And I really see that bounded, this outer image really looks like a bowl for me. So I've been thinking of myself as a bowl maker making bowls. So I'm trying to think about craft knowledge, craftsmanship, patience, the workshop, taking care of my tools, professional workspace, documentation, board of directors, next generation. All of those things kind of fit together into a collective system that I'm trying to integrate. So what I'm thinking about position trading, that's what I'm looking at: monthly, weekly, and maybe even as fast as daily charts to look at positions I want to hold for long term. So you would find things like positions that come out of the core systems or blended monthly rebalancing or asset allocation, where I'm doing monthly adjustments. I'm really starting with a broad market classification and then looking for signals and information from the ETF2 system, then the weekly review of those blended monthly rebalancing portfolios on the weekly chart. And really what I'm hoping to get out of this position trading is the knowing the seasons and watching out for tsunamis and El Nino, which can really wreak havoc on kind of your long term base positions. Right? In the swing trading, I'm looking for patterns and strategies that are guided by the Risk Z and the NDX10 that help me in that 2-day to 2-week holding time frame, and I'm looking for diversification at the system level. So since I'm using mostly the same targets all the way through for all my swing trades, where the diversification comes from is the system level. Some of them are buying momentum breakouts or volatility breakouts or 5-day down reversals or a triple screen or continuation patterns. So there is enough diversification at the system level to ensure that I'm prepared for all market conditions, all market directions, quiet and noisy as well. And so I use a common approach to targets in what I'm trading, the trading things, a common approach to describing market conditions, a very standardized way of trade framing, and then trade management and trade exit. So the common approach is where I get the synergy from doing routine things routinely, but diversification occurs at the system level so that I'm not locked into just one particular pattern or type of trade. When I'm swing trading, then I'm really looking at kind of weekly and daily. I would probably expand that to include 2 hours as well. When on my next version of this chart, that's really underneath the swing trading. 2 hours is a kind of a fast swing trade for me. Weekly is a slow swing trade. But if I was thinking, and if I had my position trading hat on, then weekly would be sort of the normal time frame, because I'm thinking about holding it for months and quarters. But if I was thinking about it as a swing trade, a weekly would be a slow time frame. When I'm doing core and turbo trading between position and swing trading, it kind of works both ways, is what these directions mean, those arrows. Sometimes a swing trading success migrates to become a longer term position trade. So that's where information and opportunity come from. Or it could be a position trade that is doing well and I want to get more of it by making it a turbo swing trade to add to that core position. Or I may be wanting to protect against an extended position by using the swing trade as a hedge. Or maybe there's just something I've noticed in the price patterns that suggests there's an opportunity to do more inside the swing trading. So the core and turbo then, really I'm using anywhere from weekly to 2 hour charts in order to blend or integrate position and swing trading. At the other end, when I'm day trading, I'm really using statistics-based patterns. And I'm using fractal patterns and fractal management, meaning that the sense making that comes out of the RLCO and Bollinger Band and MACD histogram indicators are operating in the same way for me, whether I'm looking at one very fast 1, 2, and 3 minutes, or 5 minutes or 10 minutes or 15-minute charts, the fractal nature of the patterns and the indicators means that I'm applying the same kind of judgment and interpretation in every time frame, and this gets to be very efficient in terms of pattern recognition and the cognitive load and the cost of cognition that it takes to actually make the decision, so that those decisions don't wear me out because I'm executing them in the same way all the time, regardless of the time frame. And day trading, more than anywhere else, exercising ruthless risk management. Unless that thing is working for me, I'm already moving towards the exit. So I get in on the basis of statistics, and when it works, it should be working like right away. And so I start moving towards the door right away. So the longer I'm in that trade and it's not working, the more likely I am to get out. And then I use statistical process control, looking at averages and standard deviations and the time series pattern of ours, the shape of the histogram. All of those things become very important in terms of this rapid fire production type of trading, and it should be manufacturing R's and fragments of R's with very low risk because of the ruthless risk management. And so statistical process control is an appropriate way to evaluate that package, that style. And so then the core and turbo then, between swing trading and day trading, works the same way as it did between position trading and swing trading. Only now in this case, swing trading is the long term, and it passes information to the day trade in the sense of if I get a good swing trading setup, then that becomes automatically something that I'm interested in day trading. And if I can swing trade and day trade the same target symbol, then I have gained a synergy by only having to look at one target and make sense out of its patterns and rhythms. Day trading is a way to hedge the swing trade, and it also provides ways of opportunities to enter swing trades. Like if I'm able to get a couple day trades in a row on one symbol, then it may be a move that is attracting the attention of higher time frames, and this thing could grow into a swing trade simply on the basis of a series of successful day trades in one direction. So that's what I mean by the information and synergy goes both ways. The hedging and opportunity trading goes in both ways. And then all of those technical systems are tied together in this meta system of management that involves self-regulation and then in self-improvement in the form of that. For me, trying to teach is how I learn, because I take the teaching very seriously. It allows me to focus and do my duty to others, and therefore as a result of trying to do that well and then interfacing with students is where I learn, and then that leads to research and action in my trading practice. The use of peer review and the board of directors I've kind of already covered. So when you put all these things together in this meta system, I see this as one giant bowl of trading. And you could look at, if you looked at this in fractal terms, that the same way that I try to bring a craft work approach to the particular systems, whether it's position, swing, or day, or the core and turbo trading, it's the same kind of craft work that I try to bring to the self-regulation and management. So even the way that I'm trying to gain self-improvement and systemic improvement takes the form of a fractal system, that the way I learn to improve my day trading is the same way that I learn to improve my self-management system and so forth. So that was sort of a new information display about how I am seeing my trading environment and my teaching environment and the collaborative learning environment that we have right now, and I thought I would share that with you. And this becomes a nice way for me to focus and remind myself of what it is that I'm trying to do. If I should probably put a little tortoise in the middle of that, or an owl, or a yin yang symbol. That would be a really nice focus. So maybe I'll do that next. So that's what I wanted to say about that. Again, if you guys got any questions or comments, we don't have any, the direct Q&A session here, so I wanted to give you some other material. Um, Actually, I guess what I should do is check the June start, guys. Actually forgot to look at that. And there's probably a ton of things in there. No, we're still good. They're really, I mean, to be fair, they're really not going to start on the formal lessons till June anyway. But that's where we will pick up the that little weekly Q&A session. So I wanted to take a chance to talk to you about some stuff that Bob Rourke has shared with me. Now, I will tell you, Bob is on my board of directors. He is in my will as the guy to take care of my family money should I pass before him. He's the guy that I trust with my family money. That's how much in esteem that I hold him. And so whenever you see him post charts, you ought to pay close attention to him, because I sure do. Just a great American, good person. So he wanted to share some, just a quick look at, so this is the S&P weeklies going back about 3 years. And what we're looking at here are the places where the MACD line tilts up. And now I want you to just pay close attention to this zero line, and what happens when this thing finds support and crosses back over the EMA when it's above the line. It's always good. Always? Yeah, always. It is always good. And what that means is that, let's take a look at this first one. So we're above the zero line, it came down to a consolidation, and then instead of failing back to the zero line and going negative, it finds support and crosses over its own 5-period simple moving average, and then up it goes for the next leg, and you get this move. He could have highlighted this one right here. It went up, came back down, notice that it's slowing down, and then it crossed back above the signal line here, and boom, you got another leg. And that's a 10% move just in there, by the way, because these are weeklies. And now you can see what happens on every one of these little upticks. And especially after a significant sell-off. Well, here's one where it goes below the zero line. And now he's got a Bollinger Band river on the MACD line itself. And so when it comes out here to Z2 and beyond, and then crosses above and crosses its own 5-period, that's like a pattern 1 in a price pattern in the RLCO. It has exactly the same function. Well, here it's a lot smoother because you're not distracted by the shiny candles. But here's, you get this one, and that's a 6 or 7 week move from 195 to 220. So that's a 25 point, that's a 12.5% gain up to this point. Now, when it doesn't hold the zero line, you should, when it crosses the zero line, you should pay attention to that, because that's what happens next. And now you get another P1, and here's your entry point. Here's a 1, 2, 3 entry, and then off we go, and never looks back. Here's where it crosses the zero line, consolidation, and keeps going. Notice how good the PSAR as an initial stop is. Now, it has this nice move. It's testing this resistance. It's like a quadruple top. And now, instead of failing further, it crosses back above its zero line, and off it goes for another run. There's a cooling off period, comes back closer to the zero line, but it doesn't come down to the zero line. Instead, it's above the zero line and crosses above the signal, and off we go. And look at this nice move from 210 till 260. That's 50 points on 200. That's a 25% move in 9 months. And the PSAR was your friend as a trailing stop the entire time. And even if this got you out, the PSAR flip could get you back in. And once again, above the zero line, crosses above its line. I'm not sure you need anything else. You know, to be quite honest with you, for the longer term positions and long term swing trading, I don't know that you need much else than this, my friends. Notice the Z3 pinch, and then the breakout, bam, and off you go. And now when you have a move outside of the red line, in this case he has that marked as a, Bollinger Band 30 and 2 1/4. His outer ring is 2 1/4 instead of 3. But outside is a 3. When that crosses over, you get a P1 on the upside coming down, a PSAR flip. You're automatically kind of protected in this entire chop that's lasted from like February until Wednesday of this week. You've been protected against that because of this. Now, I want you to notice we are just beginning to cross over to the upside, and if you listen to the weekly commentary, you know what I think about this. I think this is a very good sign. And we're within 4% of the all-time swing high. And this chop was failure to fail further. And notice that the RL270, the long-term fair value, has been a big magnet for this thing while it was suffering. And even while it exceeded it, pulled back and found support at fair value. And now this is optimism coming back in once more. And that's the line in the sand for Bob is 253. I wouldn't disagree with that at all. Although I might come up here to the belly of the RL10 as my support at 265. And this comes from, he was discussing the that weekend report that I did where I talked about this 1, 2, 3 pattern of higher lows and then taking out the hump of the 10, and that this being the entry that coincides with this cross to the upside above the 0 line, and the same thing happens here. Both of these entries here and here get you into this, and this is Visa. This isn't even the S&P. Here's another one where it crosses the 0 line or where it crosses itself and goes back up. So the more you start looking at that pattern as a longer term indicator, the better you're going to like it. And this is just using simple daily and weekly charts. So here's another one. This is Visa. Looking at dailies, and he zoomed in on this one for us to make it a little bit easier to see. So here you have this cooling off period, and then the 30 finds room and crosses back above its signal line, above the 0 line, and then off we go. The PSAR flip all the way to here, and now on this move, this P1 well outside the river alerts you to protect you against this. Now you have a cross below the 0 line, then above the 0 line. You can buy this one right here, and you're in right about here. And now you can rebuy it either here on a front run, or when it crosses the 0 line, and you're happy with an entry at 120, and now it's at 132. That's a 10% move, and looking really good. It's cleared. It has cleared this the dragons, or the hump of the 10, and off we go in V. So just an example of the kinds of things Bob posts and the things I would recommend that you pay close attention to. The final thing I'm going to cover here is this was shared from a guy at our last swing workshop who asked me to take a look. He's in the Super Trader program, I believe, and he gave me permission to share with folks to consider. I have some comments that I'm going to make on this one, but what he's doing here is really looking at a permanent and quarterly trading plan. And so if I were to go back to this one, he's really talking about position trading and just a little bit of swing trading, but as a foundational patterns about how he's integrating this end of the curve. And he asked me to comment on. I've given him some initial comments already. Let's see if I can get back to that. Yeah. So I've given him some initial comments already, and I asked him if it'd be all right to share that into the into the chat room and into the swing trading course, so that folks could take a look at what I consider to be a pretty good approach to systematically laying out the plan. And so what he's done here is he's talked about part one, where he's looking at the permanent and quarterly rebalancing. He's identified some system objectives, which I'm going to take a close look at, and he's really combining some work from Harry Brown and then my core systems. I include an analysis of Harry Brown inside our core system workshop. He's identified some benchmarks, performance objectives, system descriptions, identified some targets. He's looked at some variations of my work that he wants to incorporate. He had been looking at some alternatives because he's trading from Belgium, and so he's got some additional administrative and tax implications. But after his research, he thinks that he may not have to go the route of comparing contracts for difference, options, and futures, and so that's still a work in progress, but it's not on the front burner. He's taken a look at some key beliefs that he's articulated and made his own, talking about trading populations. He's talked about how he's going to combine these into a meta portfolio, looking at the implications of brokers, edges, position sizing, a plan for how to get started from all in cash, and then to integrate these different pools of activity into a pattern for rebalancing that's manageable. And then he's identified areas in which, if he sees opportunities, he's going to be looking for ways to learn and grow with the system. He's considering the risk as he goes, and now he's done some back testing. You can see that based on his going back to about 2004, there are some reasons to be really interested in this blended approach. The blue line is the buy and hold in the S&P. This is his system, his blended system performance. About 4 times the S&P's return, with only a slight increase in the relative volatility, and that volatility is geared towards the upside as well. So that's, if you're going to have volatility, you have it geared that way. Going through the usual analysis of performance, by year. Details of the back test, some system quality number calculations based on the taking the average loss as a 1R and coming up with some performance stats. SQNs are pretty darn good. 5 1/3, 4 3/4, or 4 2/3. Taking into account the taking a look at the compound annualized growth rates and Sharpe ratios. The maximum drawdown percentages are pretty attractive in a period that's featured 3 times the market's lost over 50%. That's pretty good drawdown stats. Look at cumulative R and trade sequence distributions, trade rankings, the histogramma results. When you're using the average loss as R, then you're going to see some that are bigger than 1R, but as long as this is controlled, that's manageable. The second thing I look for is a managed, a normalish looking shape to this curve, and then fat right tails. He's done some Monte Carlo distribution already so that he can find the expected performance, predicted performance, and then the actual performance, and then looking at the +1 and +3 standard deviation envelopes for ongoing management performance. And so I think this is a pretty good start in putting together a comprehensive plan that integrates trading in the position and swing trading dimensions that fit his circumstances and personality, and provides him the basis for developing a pretty good business plan to approach. So I'm going to upload that into the swing trade course area for you guys to look and comment on, and then I'll consolidate those and share them with Willie, and he gives you his thanks in advance for taking a look at his stuff, and I think it serves as a pretty good template for how to get started. Okay, so that's everything I wanted to cover tonight. I'm pending any questions from you guys. I'm going to go ahead and lock it up here and get this recorded and posted on YouTube, and then a link into the room, or into the swing trade course. So I'll give you guys one last crack at any questions. And I wanted to say thanks to Aruj, who took it on, found his inner voice to help support the soccer team, and I was similarly moved to look in your email for a coupon for a 2-for-1 coupon for future goods and services and subscriptions or whatever. Just I was also moved by your generosity, and maybe you caught me in a weak moment. Now you hit me where I live, and that's helping kids learn to play the beautiful game. So I genuinely appreciate the offer, and I wanted to reciprocate by way of thanks. So, well, take good care, guys, and we will see you in the chat room and in the swing trade room. I really think this weekend's weekend report review has some important information about my reasons for optimism going forward. I think you would also see it in the chart that Bob pointed out. I just really think I think it's not this one. Is it this one? The weekly on the S&P. Really, this big candle here and this cross to the upside after this withdrawal all the way back down, but finding support above the zero line. I just take that as a really important signal, and then it's got to get above the PSAR stop, and then above the RL10, and then it's just a short distance to the all-time high, and then it's free and clear, and then all of this choppiness is negated by a vote of confidence in the U.S. And in the nation. So take good care, and we will see you in the chat room.